But let's welcome on board Yashish Dahiya, Group CEO and Chairman at PB Fintech, to talk about how their quarter has been. Yashish, good to have you on the show. But firstly, we're going to get the final print of the budget very soon. For the past few months, there have been many talks around the relief on taxes from the government for insurance products. As an aggregator, tell us what is it that you're expecting from the government during this budget, and where do you think the support is required for insurance players?
Today, you ask any middle class person, what are the two products that are essential for their families? I think both health insurance and term insurance have become essential. And they need two supports. One is on the GST, but that's not the most important one. The most important one is actually on the tax break that you receive. 1010D is there, which has a special carve out for health. And increasing it will be very welcome. But actually, just as importantly, I think term insurance needs a special carve out from from life insurance, because life insurance has got a large number of products which are savings oriented, and term insurance is only 5 to 10% of the total life insurance premium. So it's not a very large amount that the government has to support with. And today there is a limit, but it combines both the investment products and the term products. In my opinion, a lot of the savings products of life insurance operate a little like the savings products. Of course, they have an insurance component, but that insurance component is very minimal. And the term insurance product is a pure protection product where the customer is not going to receive any return, and it's a small amount of premium. So I think a separate carve out for term insurance and an enhanced carve out for health insurance, it's something we've been asking for the last multitude of years, and or at least mentioning. I think it's a very important thing that must happen, and if that happened, it would be very welcome, a change for the consumer, and would also make a very clear statement that, listen, we separate these two products and we believe they need to be treated differentially in the insurance landscape.
Okay, so in terms of some insurance products that are still treated a way of tax saving, on the other hand, government is inclined towards making the new regime more approachable, where exemptions are very limited. Do you think in this budget there could be a likelihood on perhaps some old push towards insurance?
See, I think social security needs to be taken out very differently. And if we do not do that, we do not provide an incentive for people to purchase health and term insurance. In many parts of the world, and including in India, the government is taking the burden of providing social security. That's what Ayushman Bharat is about. That's what a lot of other programs are about. And thus, where the consumer is willing to spend his own money, I think an incentive must be created. But I'm in the same breath being crystal clear that does not apply to the savings side of life insurance. And I totally agree that should move to the new regime as much as possible. However, a classification should be created specifically for term and health. And you must appreciate that the premium going towards term and health, and specifically term, is a very small fraction of what is going towards life insurance. So one is not asking for a lot here. I think the total premium going towards term insurance probably 6,000-7,000 crores. So it's not a very significant amount that's going. And I think that protection is it's required for the family, and we must encourage it. So even in the new tax regime, we must again create a carve out for just these two products. I know there'll be a lot of lobbying and all that stuff, but this is not about lobbying. This is very simply about the consumer and what the consumer's needs are.
But there were talks around of the reduction for GST for certain health insurance products and also for senior citizens. Should we expect anything on that front during the budget announcements? Anything that is likely?
I think an enhanced tax break would be very welcome. GST is a very good thing if that can happen, but that is for the government to think through in terms of what is the implication, positive and negative, of the GST. I also heard recently that there are both sides to the implication from a tax credits perspective. So I think it's a good to have, but I think the bigger element for the consumer is not the GST, because the consumer, when purchasing, does not think that heavily about GST. And look, we sell to millions of consumers, so I know how the consumer thinks. The consumer does not worry about whether the product is costing 10,000 rupees or 12,000 rupees. But the fact that he's receiving a tax break on that 12,000 rupees is very important to the consumer and ensures the consumer makes that transaction.
Right. So, Yashish, are you expecting any significant announcement around composite license anytime soon? Because general insurers are already facing issue in margins. How is it that you think this is going to play out in terms of competition?
See, I don't have a specific comment on that. There are lots of pros and cons. People have taken licenses under certain assumptions. And of course, competition is always welcome because competition brings out the best in any industry. And specifically, products like health insurance require a lot of investment still. And we cannot, not make that. So the more licenses are welcome. However, whether there should be a composite license, whether it should not be a composite license. I think these are complex conversations that are more for the regulator and the government and the insurance companies to comment on. We always welcome competition. And I think it's a good thing if there are more licenses in the industry, because that's essentially what composite license means. It just means more licenses. So more licenses to sell more products.
So as per our exclusive sources, government may allow 100% FDI investment for insurance companies. What's your take on this, and how do you see if this move is taken from the government?
We need a lot of investment in the sector. And I think the more investment, the better. And there are a lot of companies who would enter the country once they know that they can control the operations end-to-end 100%. That is a huge advantage to companies. Of course, insurance is a long gestation period product. So don't expect anything in 1 year, 2 years. But over a 10-year period, I am very sure if we allow 100% FDI, we would have more investment coming in, and that would be good for the consumers as well.
Right, Yashish, but on the other insurance sector, overall, what is your expectation from the budget for the corporates or the startups as a matter? What should be considered during the budget to foster them?
So I think from a startup perspective, I know there are lots of things that need to be thought around this. But one of the big challenges employees and managers in startups face is, see, these are first generation entrepreneurs. And when they receive ESOP, they have to pay taxes in advance of receiving the money. So to exercise their stock, that doesn't mean they have received the money. They're just exercising their stock. They have to pay taxes. And in order to pay those taxes, they are forced to sell shares because they don't have any other source of income, or they have to take a loan. And I think that is very harmful. If somehow there could be a carve out specifically for startups, maybe 15, 20 years, tech-based, there could be some conditionalities around that and people could qualify for that. So I do understand this facility could be misused otherwise. But if there is a facility that can be created, that these people do pay their taxes, they do pay their perquisite taxes, but they pay them at the point when they actually sell their shares. That would be very, very helpful in fostering the startup ecosystem. And I think, as you can notice, I've only spoken about material impact things. So this would be a very material impact in enabling the startup ecosystem and allowing management of these companies to keep owning share. As it is, in all the startups, you notice that the management is left with 5 to 15% equity. But it would allow them to retain that equity for much longer if this could be there. Otherwise, whenever they have to exercise, they have to sell shares.
All right, Yashish, with this, we'll let you go on that. Thank you so much for taking the time out and helping us understand and give us a sense that actually what to expect for the insurance sector in the upcoming budget. But